one and go from there. Okay. Otherwise, you're going to be stuck Monday night.
No, I can't. And I already have a taping Monday night.
Oh my goodness.
Yeah, we
Oh
do.
my goodness.
We do the round table.
Well, I don't know. Maybe I'll like squeeze in after that taping. Joe, you're such a busy man.
Well, right now I am, because the next couple weeks are ugly because I'm coming to see you. That's why.
I know we're coming to New York. So we just decided to pop on this live YouTube with absolutely no warning. So hi, everyone.
Hey there. This is Bobby. I'm Joe. And we're gonna make some great radio while you're out with us.
We'll see if we have an audience. We're brand new, not brand new, but we're pretty new to YouTube. And like I said, we literally put out, usually we go on Instagram, which everyone should follow, at Money Friends Pod. And we do announce when we're going to do tapings and we do previews. This is just on the fly. This is as raw and behind the scenes as you can pretty much get.
I am gone Tuesday through Saturday next week without a microphone. So Bobby and I are in panic mode to make sure we get this in. But we've got some great stories. And
one at a time.
So we're going to do the trading above 29,000.
Yes. And that will go out this Saturday because that is the most news pressing of the stories that we will be doing.
And
we're going to take a break. We're going to hope to do 4 shows today, and we're going to take a break in between each one just so that each show doesn't get too long. So, you know,
let's just go. Let's just go the first 6 paragraphs here. Maybe 3 paragraphs. Maybe you want me to go the first 3 and you do the second 3?
Mm-hmm.
That'll be fine. That'll be good.
Okay, let's do this.
Awesome. And it looks like right now it's just you and me.
It's just us.
If you show up later.
Well, this is kind of a top secret recording. We literally told no one, and this is still one of our very first recordings ever on YouTube. So
exciting.
We're flying under the radar, hoping to be discovered.
If you're watching later, hit subscribe and you can follow us. You'll get notifications when we come on. All right. And then you can, by the way, and if you show up during this, leave comments in the comment section and you can be a part of the show as well. So, all right. We'll do Tiller Money, and I'm ready when you're ready.
All right. Age is just a number, and so are the milestones of the Dow, but we love to celebrate them both and then maybe obsess about what it all means for our future. We're talking Dow 29K, and while this milestone may be different, on this edition of Money with Friends. Welcome to the Money with Friends podcast. I am certified financial planner Bobby Rebell, host of the Financial Grown Up podcast, coming to you from my very grown up kitchen in New York City.
And coming to you from my mom's half-finished basement in Detroit, Michigan, where we make the Stacking Benjamin Show. I'm Joe Saul-Sehy.
This is the Money News Show that includes commentary on recent headlines and stories with thought leaders from across the financial landscape. We break those stories down into what matters to you, our friends, and we leave you with a takeaway to make it your own.
Today's show is brought to you by Tiller Money, your financial life in a spreadsheet, automatically updated each day. Only Tiller Money automatically updates Google Sheets and Excel. You choose with your daily spending, transactions, and account balances. You can try Tiller free by going to tillerhq.com. You can try it for free and get 20% off your annual subscription if you go to tillerhq.com/MWF. Thanks to Tiller for supporting Money with Friends. And Bobby, we've got a new record.
We do, and it happened real fast this time.
It's so funny. We just did a show not that long ago about all the tension in the Middle East and the stock market shaking, and all of a sudden we shrugged that off.
Yeah, people have been so worried about trade with China, and we're moving forward.
Yeah, let's move forward on this topic. Let's see which one of our friends is going to kick off today's show. All right, this piece comes to us from Market Watch, written by Mark DeCambray. Mark writes, the Dow Jones just closed above 29,000 for the first time in a brisk 40 trading days. The Dow Jones Industrial Average on Wednesday closed at the psychologically significant 29,000 milestone, marking the first finish at or above that level for the blue chip benchmark. And I messed up. We get to do that again.
Okay.
Take 2.
Are we going to start from the very beginning?
Let's start from the very beginning.
Okay.
Let's pretend this time that I hit the recorder first.
Oh, that's why you messed up. Okay.
Yeah.
I thought you said something wrong in the article, and I was like, "Oh, then just pick up."
Nope. I looked down to see where we were,
Okay.
and we're nowhere. All right,
Oh
guys.
my yes, okay, good. I thought we never mind. All right. Let's start from the cold open. Age is just a number, and so are the milestones of the Dow. But we love to celebrate them both and then maybe obsess about what it all means for the future. We're talking Dow 29K and why this milestone may be different on this edition of Money with Friends. Welcome to the Money with Friends podcast. I am certified financial planner Bobbi Rebell, host of the Financial Grown Up podcast, coming to you from my very grown up kitchen in New York City.
And coming to you from my mom's half-finished basement outside Detroit, Michigan, where we make the Stacky Benjamin Show, I'm Joe Saul-Sehy.
And this is the Money News Show that includes commentary on recent headlines and stories with thought leaders from across the financial landscape. We break those stories down into what matters to you, our friends, and we leave you with a takeaway to make it your own.
Today's show is brought to you by Tiller Money, your financial life in a spreadsheet, automatically updated each day. Only Tiller Money automatically updates Google Sheets and Excel with your daily spending, transactions, and account balances. You can try Tiller for free by going to tillerhq.com, or, and this is much better, how about free plus 20% off your annual subscription if you head to tillerhq.com/MWF. Well, we have a sale on Tiller if you use our link, but Bobbi, no sale on the stock market. It's through the roof.
It is through the roof, but it's up for debate whether it's a good value or not. Some people might say there's still a lot of money on the sidelines that can come in. People are saying there's still going to be a rotation into stocks from still a lot of money in the fixed income market. We'll get into that.
It's crazy. It feels like we were just doing a story about how the stock market was taking such a break because of all the tension in the Middle East. And now we're talking about brand new highs.
Yep.
Yeah. Let's see who's going to help us kick off today's show, and then we'll get to it. All right. This piece comes to us from Market Watch. It's written by Mark DeCamber. Mark writes, the Dow just closed above 29,000 for the first time in a brisk 40 trading days. The Dow Jones Industrial Average on Wednesday closed at the psychologically significant 29,000 milestone, marking the first finish at or above that level for the blue chip benchmark. The Dow closed out Wednesday's action following the signing of the first phase of a multi-stage trade pact between China and the U.S., up 0.3% to 29,030, a gain of over 90 points. The gain marks the 40th trading day since its last milestone on November 15th and the fastest such ascent for the Dow since January 2018, when it took only 8 trading sessions to close at 26,000.
To be sure, round numbers like 29,000 aren't necessarily significant for the market, but they can help to reflect growing upbeat sentiment despite a number of risks that have confronted investors in 2020. For years, market experts had termed the bull market the, quote, most hated in history. I never hate a bull market, Joe. And increasing bullishness in the current phase of the run-up continues to feed fears that equity markets and bond markets, for that matter, are becoming too richly valued by some measures and that average investors aren't necessarily benefiting from the upsurge. It also talks about the fact that the S&P is reaching new highs and the NASDAQ reached its second best gain in history. I also want to mention a detente between China and the U.S. on longstanding trade clashes has provided markets the platform to gain altitude so far in 2020, with investors also digesting fourth quarter earnings. And I do want to point out this other paragraph here. Of course, the higher the Dow Jones Industrial Average rises, the smaller each 1,000 point move is in percentage terms. But individual investors have tended to pay close attention to the Dow when it carves out fresh milestones. And we can talk in a minute about the chart that they do have in this article.
What's your first thought when you saw this piece when I sent it over to you?
Oh, that was my thought. Like, yeah. Okay.
As in relax or
no, just like eye roll. I mean, I remember, I'm going to age myself, but I do remember I was working on the floor of the New York Stock Exchange. I'm going to look up when it is. It was 1999. It was March 29th of 1999 that the Dow hit 10,000. And I remember before, so I was a reporter there. For people that don't know my background, I was a reporter there. And I think I was at CNN at the time. Anyway, but they handed out, no, I'm sorry. I was a Nightly Business Report. They handed out these baseball hats that said 10,000. And it was a few days ahead of it. They were waiting and waiting and waiting. And to me, that really is always going to be the big milestone, 10,000. Because I guess you hit a 5-digit number. And then, the percentage gains, when you look at this chart, I mean, to go from 1,000 to 2,000, obviously that's 100%. And, it took a much longer time. I mean, it took from 1972 to 1987, right? So we don't say, ooh, the Dow's up, 10%. We just talk about these numerical milestones and not how much it gained. This last bit, it's just a couple percent. It's not as much.
It's funny. I thought the same thing, which is why I want to talk about this piece, because I saw so many, I wake up in the morning, I make myself breakfast, I sit down with my Flipboard and I start going through financial pieces, right? And looking at stuff. I saw, I think, to round out the number, a bajillion pieces about this quote milestone and about 29,000 and what a big deal it was. And I thought, how funny. Like, if I don't know anything about money and I don't know, and I'm just getting started, I led to believe that this is a big, big thing, Bobby. I mean, all of the pomp and circumstance around 29,000 or 28,000, 27,000, 26,000, whenever we hit any of these milestones, there's a bunch of it. It means nothing. It means nothing toward my goal. It means nothing toward what I want to achieve for myself at all. All it means is that my money's doing what it's supposed to do. Over long periods of time, the stock market should go up and the Dow should fairly often have some new number that it hit. If it doesn't hit new numbers, that's when we're running into trouble.
Right. I mean, I think we should really only count at least in 10,000 increments as being significant, clearly. And I also think that we have to look at the stakeholders in creating buzz about this. Who benefits? Well, anyone that's selling content, because it's something you can write about. And there's a lot of content creators that are under constant pressure to churn out more and more content. That's one of the reasons I was very frustrated in my, quote, as we now call it now, traditional media career, is that it went from doing 1 or 2 stories a week to they wanted me by the end to do 6 pieces a week. Now, the 6 pieces weren't the same quality, but it's still just a huge amount of volume of content. So people are looking desperately for something to say. I mean, instead of having a half an hour of evening news, these stations have to fill so much time. So if they can create a new headline saying Dow closed above 29,000 with a breaking news flash, that's content for them. That's something to think about. There's also people that make money from FOMO, that people might feel, okay, we can get more people to invest in the stock market if they feel like they're missing the ride. And so when you promote something like this, it gives people the feeling, oh my gosh, oh my gosh, oh my gosh. Or some people might also take profits. So
no, that's what I would
go the other way.
No,
it's creating a moment. It's artificial. It's like a Hallmark holiday for the markets. I like that. Let's make that the headline. A Hallmark holiday for the market.
29,000 Hallmark holiday.
Coined by me.
Yes. Yeah. Send somebody a card and then forget about it. My, one of my takes was exactly that, which was, people are going to take it positively going, oh, I'm not in and I need to be in more. No, you don't. You need to be in according to your goals, and 29,000 is irrelevant toward that. On the other side, to your point, people are going, ooh, it's overheated. It's at 29,000. So I should probably exit. No, you shouldn't. It's like you're driving past a milestone on the road and it's like a mile marker.
Yeah, it's a couple percent in this case. I mean, it's, versus, going from 1 to 2 is obviously 100%. Going from 9,000 to 10,000, that's 10%. So, just think about that. It's not like the market went up 10% in 40 days. The market went a couple percent up.
Right. So
it's 1/5 as important in theory, right?
Right. And I was trying to think about this, through analogies, and I try to think about what is this like the why behind the reason you and I are saying this. And if I'm an investor, if I'm a new investor, what I need to know is that the stock market going up, all that means is that share prices continue to go up, and share prices have to go up for shareholders to increase the value, for company values to increase. So all that the stock market going up is a marker of companies becoming worth more. If companies aren't worth more, the whole economy crumbles. So when I would work with new investors back when I was a financial planner, I would have to explain that because until that time, people thought it was a little bit of voodoo, Bobby. Well, the stock market could crash tomorrow. Well, let's talk about the implication of what that means. If Amazon stock goes to zero, which is a big part of the S&P 500, that
Mhm.
means Amazon is gone. What do you think the chances that Amazon's no longer going to be in business? And my client, who's never invested before, would go, well, yeah, that's not going to happen. Okay, but hold on. Apple would also need to go out of business. So
Right.
would General Motors. Maybe a little closer chance that that could happen, but still probably not going to happen tomorrow. General Electric would have to go out of business. So you go through the S&P
Be
500.
careful there.
Good point. You go through the S&P 500 though, and you look at all these companies, and you just ask yourself, what's the chance these are going to go away? But on the other side, the Dow going up just says that companies are continuing to earn money for share, which they pass on to shareholders. That's all it is over the long period of time. So if we hit a new high, that's why I think Bobby and I are big time rolling our eyes.
Yes. And remember, we do have a constant stream of money, generally inflows going in just from the nation's people investing in 401ks and those kind of things that are automated. So there's a natural tendency to lift more than obviously withdrawals. We could get really wonky and talk about the changes in the Secure Act and how that's going to keep more money in the market longer. But essentially, high level, you used to have to take money out the April 1st after you turn 70 and a half. And now that's now going to be the year you turn 72. So that will keep money in the stock market a little bit longer as a nation, as we like to say.
I
So
was
that's a little tweak, getting super nerdy there.
Well, and when you brought that up, I'm like, okay, Bobby just extended the length of this episode by about
No, I said I made my point. The point is you don't have to take money out of retirement vehicles as young. You get more time, which means money stays in there longer.
The good news is that you do get to leave your money in longer. The bad news is we do have to bring this to a close at some point. So for that end, Bobby's going to come up with her takeaway. I'm going to have mine. Before we get there, though, I want to talk just a little bit about our sponsor for today's show, which is Tiller Money. I use Tiller Money because of the fact that it's a spreadsheet. I'm not a spreadsheet guy, but I've used a bunch of different apps. And the frustrating thing for me with the apps is I can't change the parts I don't like. With Tiller, it's like an app, but because it's spreadsheet based, I can just hit delete on areas that I don't want to track, or I can combine categories if I want. On the other side, by the way, if you're somebody who's much more of a spreadsheet geek than I am, you can slice and dice it as much as you want. How often do I go to Starbucks on Tuesday versus Thursday? Doesn't matter what it is, Tiller can do it for you. To check it out, you go to tillerhq.com. But if you use our link, you'll also get 20% off your subscription if you buy it. It's tillerhq.com/MWF. And you and I, Bobby, both know some of the people over at Tiller, and just a cool little company, great people that are just trying to do a great service. And frankly, people that eat their own cooking, which I like too. You talk to Tiller, people that work there, they're all like super excited, not for you and I to buy it. They're excited about it so that it's better for them, which is what I like, maybe even more.
Yeah. And it's a great thing to do for the new year.
Yeah. Get on top of your money. All right. What's your takeaway, Bobby?
I still, like I said, I have this hat that I got from the New York Stock Exchange when the Dow hit 10,000, and I remember what a big deal it was. And it's fun. I mean, these milestones are a talking point, but the reality is tomorrow is just another day. So I guess we discussed why we shouldn't discuss this. We were kind of negative, and yet we were being hypocrites because here we are. We just created content from this show. So let's be honest and own it. There will definitely be a show about Dow 30K, and it's coming up fast.
We will pop that too, where we tell you
Yes, we are hypocrites here. Thank you very much.
Yes, and you know what? I had a little bit longer takeaway, but I like the one you did. You're better. I'm going to end the show on Hallmark Holiday.
Oh my God.
Drop
the Hallmark holiday.
That's it.
There you go.
Thanks to everybody for hanging out with us today. If you'd like to watch us make the show or help us make the show, head to our new YouTube channel where we made this one. It is go to YouTube, put in Money with Friends, and you'll see our logo there. Click on it, hit subscribe, and you'll get an alert whenever we go live on the podcast. If you want to know, sometimes we know ahead of time when we're going live. And to do that, you can go to our our website. It's moneywithfriendspodcast.com. And we'll also tell you on Instagram when we're going live.
Yeah, there's a whole nice calendar that we have on our website that gives you future tapings if you want a little bit more warning. And it also has the links to the stories that we talk about.
Awesome. And on Instagram, our Instagram handle is also Money with Friends Pod, right?
No, it's at Money Friends Pod. It didn't
Friends.
fit. It didn't fit, Joe. And so I want it to be the same as Twitter. It's a long story, but just go with at Money Friends Pod, guys.
And you got it. That's going to do it for today. Bobby and I back here on Monday with more. We'll see you next time at Money with Friends. Bye-bye.
Okay.
You, me, and Ashley. It's like the team.
Yes, the team.
We've got the team.
All right. So let's stop and come back in.
Deal.
Yeah.
It was a good show.
Yeah.
It was a really good show.
Yeah. So for people that really want to nerd out and learn more about the Secure Act, which is a big deal, you guys on Stacking Benjamins, your other podcast, you did a really good show.
Thanks.
On the Secure Act.
I
learned so much about Josh, about oh, you know what I mean?
Yes. We also had Roger Whitney. We had Dan Keaty, the head of financial planning at TIAA, and Amy Quain, the vice president in financial planning for Fidelity Investments. So we had like an all-star lineup of people in the know that all have front row seats to the Secure Act to talk about it. And what I like too is that, TIAA at their heart is an insurance company. I mean, frankly, they do a lot of smart stuff and retirement planning stuff, but the TIAA annuity is how they began. It was for teachers. It was Andrew Carnegie. They're a nonprofit, and it was to make sure that teachers wouldn't go bankrupt. So they put money away and then give it to them a little bit over time. So the controversial part about the annuity, we had one of the most straightforward annuity companies, because as you know, that can be just a cesspool.
Yeah, but I love the conversation, and I don't remember who pointed this out, but they said if annuities were just provided without the massive commissions, they would be a lot less vilified.
Yes.
The problem is that they are aggressively sold.
Yeah.
And the commissions are tough to resist, I think, for a lot of financial professionals, especially if they do think that in the end, if they sell someone an annuity, they may be overpaid, but the person will be protected in the fact that they will have the continuing income, which is kind of what the client wants, so they can justify it in their mind that they are doing something good.
That's what's so frustrating, is that an annuity solves such a big problem around longevity that most people need, but they've done such a poor job in the annuity area, as you know, that you say the word annuity and people who need it won't buy one because of that. But it was cool because it was actually Dan Keaty from TIAA who while OG brought that up and Roger echoed it, Dan Keaty said, he goes, listen, this gives you the ability to go buy one. You still have to make sure it's a low cost. You still got to do your homework. And I thought it was great from a guy from an annuity company to bring up that point. So
yes,
I like them. All right.
You're on a tight schedule. Let's tape a show.
Do we have to?
Yes.
Let me grab. Let's talk about Acre Trader today. Okay. Sorry. I'm trying to find the piece.
We're doing the salary piece. When employers can't ask about salary.
Yep. I got it right here. Let me do Acre Trader. Okay. And
are you recording?
And I am now.
Cool. Apparently, keeping secrets pays when it comes to getting the most money in a job negotiation. These stunning new data that caught us way off guard and made us smile. That and so much more on this episode of Money with Friends. Welcome to the Money with Friends podcast. I am certified financial planner Bobby Rebell, host of the Financial Grown Up podcast, coming to you from my very grown up kitchen in New York City.
Coming to you from Detroit, Michigan, where we make the Stacking Benjamin show. I'm Joe Saul-Sehy.
This is the Money News Show that includes commentary on recent headlines and stories with thought leaders from across the financial landscape. We break those stories down into what matters to you, our friends, and we leave you with a takeaway to make it your own.
Today's show is brought to you by Acre Trader, investing in farmland simplified. Mark Twain said, buy land, they're not making it anymore. And farmland, very, very boring investment in a lot of great ways. For more information on Acre Trader, head to acretrader.com/MWF. We're not going to talk much about farmland today. We're going to talk about your own half acre, though, taking care of your
Yeah.
acre, your salary. And this piece surprised me, Bobby. There was a lot of, when you first sent this to me, I went, yeah, this is all right. And then I read it and I went, oh my, oh my.
Yeah, there's a lot of interesting data. So it definitely gives you a lot to think about, especially in this era where we are being pushed to be more transparent with our salaries, certainly among our peers, so that we know what our job category, let's say, should pay. This, well, let's just say it's interesting.
Yeah, yeah, a lot to parse here. So let's get into it. Let's see who's going to help us kick off today's show.
All right, this is from Market Watch. Joe, do you have the author in front of you? I think I
Yeah,
somehow deleted that.
Andrew Keshner wrote this piece.
All right, thank you, Andrew. The headline is This is what happens when employers can't ask job applicants about salary history. Silence can be golden for workers when it comes to revealing their salary history, a new study suggests. Workers who did not show potential employers their pay history had double digit jumps in their wages and were able to bargain better wages than workers who revealed their past pay, according to a study circulated by the National Bureau of Economic Research. Researchers at the University of Minnesota and MIT Sloan School of Management, very impressive there, devised an experiment with almost 3,000 employers posting job openings on an unidentified online job site could not see the wages previous employers paid an applicant during a 2-week period. A separate group of 3,000 employers could see the applicant pay history. So it's kind of an A/B survey. Okay, this is where it gets interesting. The experiment found employers who couldn't see the pay history asked 13% more questions of applicants, but once the experiment was over, they asked 22% fewer questions than during the experiment. Workers whose pay history was hidden from view accepted wages that were 9% more of their initial bid compared to workers whose previous wages were known. In other words, not having them know what you were making, you were able to get 9% above the initial offer versus not. Employers without the salary information considered more candidates, asked applicants more questions about their capabilities, and were actually more likely to hire. It also helped people who were paid lower wages in their previous jobs. That's not surprising. Employers who could not see salary history hired workers with a 13% lower past average wages. In other words, what it's saying basically is people that maybe were making lower salary wouldn't even be considered because maybe people would perceive it was too big a jump, I guess. Right, Joe?
Yeah, absolutely. The working paper comes as a growing number of states and cities are enacting rules forbidding employers from asking job applicants what they've been paid in the past. Almost 20 states have passed or enacted salary history bans, and another 20 cities like New York City, Atlanta, and New Orleans have bans in some form. The Chamber of Commerce for Greater Philadelphia sued that city over its 2017 ban, arguing it violates members' free speech rights. The case is pending before the Third Circuit Court of Appeals. Salary history ban proponents say when employers can inquire about past salary, that can unfairly drag down wages, especially for women already hampered by the wage gap. It goes into this more, but I want to just make sure we cover one more piece. Then I think we can chat about it. If I scroll down to the bottom of the piece, it says this 2017 survey by PayScale concluded women who refuse to discuss their pay history earn 1.8% less than women who discussed the number. Yet when men refused to talk about their pay, they ended up with 1.2% more compared to male counterparts who did discuss their past pay. So it doesn't look like following this advice of not giving your pay works for everybody equally.
Yeah, that's kind of upsetting. That's not a part that made me smile.
No.
as a woman. I think that's really a double standard. And I think that it's really a frustration that I think a lot of women have. It's that, you do have stereotypes and they do play out in real life. They are that way for a reason. But very often, women that ask for more money, I mean, this happened to me in the last couple of years. I was in I do some freelance work and I asked for the money that I knew somebody else was getting. And while they did give it to me, the note back said I was being aggressive.
Wow.
Yeah, it used that words, and, the person even compared me to his daughters and said, "I respect the fact that women feel they need to be aggressive." And I know, and he did not deny that somebody else doing the exact same job was making the higher wages, even though that person had been working with them for less time.
And a male?
It was actually not a male.
Yeah.
It was not a male. It was a woman. But the language that came back, that person had just come in and asked for more to begin with, and it was time for me to ask for that money. And I had asked that person, what they were making, and that person did share it with me, so that was good. But the point is that I was labeled aggressive and compared to daughters, which is why I do think it was gender based because there was a comparison to this person's daughters, and then the word aggressive and he understood the fact that felt I needed to be aggressive as a father of for daughters. And I think that is the tie to the gender.
Well, yeah.
Once he's bringing up his children, he's
Yeah.
comparing me to his female children and
Yeah.
asking for a number that no one disputed was the same as somebody else doing the same job was making. So yeah, it's real. It's
Yeah.
real.
Weird. I mean,
Yeah.
my what's funny is that, they mentioned this lawsuit here about the Greater Philadelphia Chamber of Commerce suing because they want to make sure that their members are able to see wages, and the city law says that you can't. You don't have to disclose your existing wage if you're somebody. I get that fight, but the interesting piece here for me, this piece kind of sounded like, Bobby, employers might be better off too, because if you don't know what the wages are that people are earning, you ask more questions. So,
Mhm.
so these companies did more due diligence to make sure they had the right person. I'll tell you, and you know this, I just hired a couple of a part-time people to be producers for the Stacking Benjamins podcast. We asked a ton of questions because of some of the help I got from some coaches that I have. We asked far more questions than I thought we probably needed to ask. But I'll tell you, now that these people have been working with us for 3 months, I wouldn't do it any differently. I feel like the second they started working with me, I know these people. I know a lot about them, and regardless of the salary amount, I want to make sure that we hired the right person. So if this helps companies ask more questions, even though you're paying your people more, you might get a lot more out of them because you're hiring the right person.
I also like the fact that it made people hire candidates they might not have considered because whether we like it or not, sometimes people assign value to what someone is paid and they think, "Oh, in his previous job, they were paid so much money, they must be really good." Or, "Oh, well, they were paid such a low amount." It's tough. There's so many creative titles these days, Joe. It's hard to kind of peg where someone is in the hierarchy, and no one wants to hire someone, 3 levels up when they really want to hire someone who's on the verge of that level or whether it's a lateral move or something. So you don't want to hire sort of someone that you might perceive as being less qualified because of their salary. And by not having that information, it kind of levels the playing field a little bit.
Yeah, and to some degree, I mean, this whole piece, until you get to that statistic at the end, makes me think that it's a better strategy to hide it, to hide what you're currently making.
But go ahead. I'm sorry.
No, well, no. I mean, regardless of whether this is going to be a big jump or not, I think it might be in everybody's best interest for you to hide it, even the employer.
Here's the interesting flip, though, especially among women now, and I do advocate this in the right context. There is a big push for us to share what we are making with each other
Sure.
in order to help us all raise our pay and to have a reasonable amount of pay parity. As I mentioned, that person that was making more money, just because they asked and they'd been there longer and I just hadn't asked for a raise until that time, and that was the right time anyway. That person shared that information with me, and that was really helpful. So, peer to peer sharing, I think, is a different thing and can be incredibly helpful. I don't think it's good to go shout out your numbers to, without being careful. It's
Right.
more of a whisper You do have to be careful because for example, sometimes you have clients where you are signing NDAs of some sort, and there are agreements that you not disclose your salary. So you need to make sure that there's nothing stopping you from disclosing that. So there are times when it should be private. I've also had times where there's some organizations that just say, this is what we pay for this. We make that number public and we do not negotiate. And that is that. And therefore, if you write for them, everyone's going to know what you're paid. But that's their thing. They're like, we don't get into haggling. This is what we pay.
I wish the whole world was that way myself.
I disagree. Go ahead. Tell me why.
Because I just want to know what it cost, or I want to know either what the item cost or what I'm going to get paid. Just tell me what that is. I don't want to think that I'm going to work and you're getting a better deal than I am and we're doing exactly the same work. I think it can create animosity later. It can create frustrations later if we find out that just because you're a better negotiator than I am, that we're doing the same stuff. I mean, I think it creates also some of the inequality that we see now, because historically what we've seen in lots of experts that you and I both talk to is that women feel like they're going to rock the boat more if they negotiate, so they tend not to. So partially, part of the pay inequality is this feeling like I can't negotiate or I shouldn't negotiate because I might not get the job. And the quicker we make that go away, I think better off we all are.
I think those are all great points. But also, I've had times in my life where I've been able to negotiate for myself, and sometimes I'm a good negotiator, sometimes not the best, and you live with the consequences. And I've also worked for a union where there were, in theory, no negotiations you could do for yourself. And I will tell you that it is sometimes demoralizing for people to feel that they cannot get a raise if they do a better job. And sometimes you could have people in the same job title, and if there's no merit based incentive, that can impact the workplace a lot when you have someone who's not necessarily carrying their load and things like that. And so it gets tricky. I think you definitely want pay parity with people that are doing the exact same output and the exact same work. But you also, I think that there should be some nuance in terms of as you go through your career, not everyone has to get the exact same raise, and there should be some variability.
I agree with that, but not on the starting level. I mean, at the starting level,
No, if you're all starting at the same, you're starting at the same. That's
yeah.
yes.
Yeah, at the starting level, it's like, hey, I don't want to like I have a friend that just negotiated a pay rate for a job, and he said he's like, I knew I didn't start high enough when they asked what number I wanted, and they immediately the people on the other side of the table that he was getting ready to possibly go work for said, okay, great. And he's like, oh, there's no pushback at all. And then, by the way, the offer came in for $10,000 less than that number. Came in for $10,000 less. And so he went back and said, hey, I told you my number was this. And the people said, oh, we thought that was like your negotiating point. That was
I don't like that.
No, it was horrible. It was horrible. You know what though? He took the job anyway.
At 10,000 less?
No, he ended up getting it at about 4,000 less.
Yeah. And that also goes to read the contract, because you'd be surprised with that. Even we've talked about buying a car, and sometimes they say one thing and the contract you sign says another thing. So always read your paperwork.
Contract always wins. I can't tell you the number of, that's a whole different type of show.
Yeah. But yes, when people are equally qualified and start the same job, of course they should have the same pay. But I do think merit is always a good thing to incentivize merit pay.
In just a second, Bobby and I are going to have our takeaway. But first, I'd like to talk just a second about buying farmland, because here's a little company that when we started talking about Acre Trader, Bobby, about a year ago now, between a year ago and now, how things have changed for Acre Trader. And I think we've all seen that farmland has been a fantastic investment. Doesn't mean that it's always going to be a fantastic investment, but I'll tell you why I like it. I like the fact that while America's farmland footprint is shrinking and shrinking, when it comes to historically the payouts in farmland, it's very consistent. And the reason is we need to eat. Farmers have to have land. And because of that, if you own that farmland, you become then a piece of this machine that continues on for periods of time. What happens with Acre Trader is Acre Trader takes a big old farm and they subdivide it because most of us don't have enough money to afford buying an entire field, or we don't want to put that much money into one single investment in one single spot. So with Acre Trader, they take the farm, they subdivide it. By the way, they show different investments at acretrader.com so you can see exactly what farmland you're getting into. And then you buy your little piece of the farm. Acre Trader takes care of the rest. They look at soil sustainability. They look at dealing with the farmer. You get a rent check every year before the crops go in. And then you hold on to the farmland until Acre Trader sells it. And then hopefully, if things continue the way they have, that's for a nice profit. But at the very least, you get this consistent rent check. So for more on how it works, because you definitely want to know more about how it works before you invest, head to acretrader.com/MWF. Bobby, what are we going to do with this piece?
You go first this time.
All right. I think that when it comes to negotiating, I have a very difficult time, as I said earlier. But I realize this is the one place where you have to stand up for yourself. You have to. And in this particular case, what we found out is that in most cases, if I give up too much information, the other side wins. So what I want to do is go into a negotiation realizing that I don't need to share everything. I need to just put my best foot forward. And that might not need to include the amount of money that I make right now. Maybe it comes up later. Maybe it doesn't come up later. I would also look and see what the rules are in your area. As more places make it illegal for your future possible employer to ask that information, you want to know that going in so that if they ask you, you've got the perfect out. I'd love to tell you that, but as you and I both know, I'm not allowed to tell you that, which is a great cop out that helps you. And based on this study, Bobby, also makes it maybe that they ask more questions and you go into a job that's a great fit for you and a great fit for them.
I think that is such a good point. That is very well said. The irony for me, my takeaway is that the irony is that this comes at a time when we're being encouraged to be more transparent to our peers about salary information in order to better advocate for ourselves. So be selective in who you share information with. And remember, though, that even though potential employers cannot ask, they can find out in other ways. There's a lot of data out there, even though technically they should not. So just be aware.
Yeah, it's yeah, so
You
important.
don't have to share, but don't misrepresent either.
No,
Just a warning. Just saying.
that'll come back to, I mean, how many of those headlines have we seen? People losing their job because they misrepresented themselves.
Yeah, like resume stuff. Even something innocuous on a resume because of the principle of misrepresenting. We've had there was some CEO that lost his job because he said he graduated from a school that he attended for a year. I don't remember who that is, but everyone can go Google that one.
Yeah.
It happens because that kind of thing is taken very seriously as a character flaw.
It just happened to somebody in the administration
Yeah.
just a few weeks ago.
Oh, I
Yeah.
didn't know that. Okay.
He left. But yeah.
Yeah, not worth it.
So she's Bobby Rebell, the Queen of Europe. My name's Joe. I'm the CEO of no, I'm just kidding. Thanks for hanging out with us, everybody, here at Money with Friends for another day. We did this live on YouTube. If you want to join us on YouTube to watch us make the donuts here, head to youtube.com, put in Money with Friends, and you will find our page. Subscribe so that you'll get a alert whenever we go live.
Yes. We also do try to put it on our Instagram when we know in advance what we're going to do. We also post questions and quizzes and little polls that you guys love to participate in. We love having you. And that is at Money Friends Pod. That's also our handle on Twitter.
We have one more week. This week is our last week of this season of Money with Friends. Who is finishing this off with you tomorrow, Bobby?
That is Trey Botch, smart shopping expert and my dear friend.
I love it when Trey's on because we talk about practical consumer tips you can use today.
Trey has the inside intel on everything. She's the best.
It is fantastic. Bobby and Trey, we'll see you tomorrow. I'm Joe. I'll be back on Thursday. See you guys later. 19.
Okay. So let's try to do another one. What story were we doing?
I will stop the stream first.
And sorry.
We'll do that. See you later, guys.
Bye, everyone. Behind the scenes.